Hello guys. So welcome to Wonderla Concall. So in this I'll be giving a full summary of the Concall which had happened recently, which is for the November Q2. So if you're driving or you're chilling, you're walking somewhere, you can sit back and relax and enjoy me explaining the questions and answers given by the management to analysts. So yeah, let's go. Wonderla. A brief about this companies. They run amusement park and resorts. They have four parks as of now, which are operational in Bangalore, Kochi, Hyderabad, and Odisha, and one more is being under construction in Chennai. And their parks are beautiful. I visited before, so yeah, they're very well maintained. They're very professional. So yeah, it's their con call. Let's read ahead. So basically, the company opens up saying that the quarter was not that great. There were some challenges because of unpredictable weather, heavy rainfall, and landslide, because of which visitors cover slow. And on top of that, their Q2 is usually a very weak quarter because of seasonality, because of rain, people don't come out. But their summer holidays are the highest, and then so their footfall has declined by 9% in this quarter, and also 13% drop in income. Then brief about how Adip Olympics, they have one dish in Kerala which they had Olympics of who will eat a lot of that. And then they added multiple rides in Hyderabad for cost of 15 crore, and it was opened by Naga Chaitanya. Then they had the official launch of Bhubaneswar Park by Deputy Chief Minister of Odisha. This park had opened in Q1 only, but now it was official launch. And then the company says that they could see some shift from offline booking to online booking happening in the quarter. And then they said that Chennai project is under construction and it will be mostly completed by next year Q3, so another one more year. And they are also planning to do private placement, that is QIP, for 800 crores for supporting their capex for next 7 to 8 years. So coming to questions, there are a lot of questions regarding QIP and how new parks where they are planning to do. So yeah, first question was okay. There is a financial performance by CFO here. Their Q2 revenue was 10% lower than Q2 of previous year, and EBITDA was lower by 90%. 90% lower because their Q quarter is weak quarter, so it was lower. And after but profit after tax compared was a growth of 9% in the year on year. This happened because of they had a deferred tax of 24 crores, so they added that this year, and hence the profit growth of 9%, whereas EBITDA, revenue, everything is down. Then there's half year performance. So the footfall, if you see, Bangalore was almost 2 lakhs, whereas in the first half it was 5.54 lakhs. So 3.5 lakh people came in Q1, but in Q2 only 2 lakh people came in Bangalore Park. So this shows how weak the quarter is. So it's not fair to judge the entire company based on this single quarter. So yeah, moving ahead. First question was by regarding fundraise. So his question was, why are you doing fundraise of 800 crores? Why can't you do it from internal cash which is being generated, which is close to 200 crores? So the management says that they have capex. They are planning to build 2 to 3 or 3 to 4 parks in the future, 5 to 10 years, and for that they need around 1,500 to 2,000 crores. And so out of that, only 800 crores they are raising through debt. So then the question is, they are building asset model parks, like that is they won't buy the land. Instead they'll buy the land for lease from the state government, and they'll build their thing, and they'll run it. So if that is the case, then 200 crores per park is the rough figure. So why do you need more than 2000 crores is the question. So the management says that if the park is happening in tier 2 cities, then 200 crore is sufficient. But since some might happen in tier 1, and there they might need close to 700 to 800 crores per park. So that's why they are doing the QIP, and they are being ready with the money. And then they have said that the QIP, this thing might vary. It's not yet finalized. It can be between 500 crores to 800 crore. Then there was question about 24 crore tax adjustment. So they said that it was because of change in long-term capital gains which happened recently. Because of that, from 20% to 12.5% LTCG tax was changed, and because of that, they had benefit of 24 crores on tax deferred tax. Next question was how many parks and like worst case, how many parks will be there in the coming 5 years? So the company said that it could be between 3 to 5 parks, excluding the Chennai one. So they already, if I include Chennai, and they already have 5 parks, so you can expect another 5 parks, 3 to 5 parks in next 5 years is what the management said. And there will be definitely like it will be a mix of parks in tier 1 city and tier 2 city. So basically they have a lot of approval and other things which they have to get from state government. So as and when they get that, they'll start building it. So they have not yet frozen on any of the parks. And next was how much footfall do you expect from like matured parks? Like if you take Bangalore and all, it's already like almost close to 20 years old. So how much footfall can we expect from there? So the company said footfall will be on very low single digit side, because the capacity is almost like the parks are full running. And on ARPU, that is average revenue per user, they can expect like 5 to 8% kind of thing per annum from matured parks, that is Kochi and even Bangalore. Whereas Hyderabad, Odisha are relatively newer ones. So there the growth will be little faster. And when will the QIP done? So they are hopeful of doing it by this financial year end. Uh, then online, they have seen about 48 to 50% growth in online alone. This was because of various spends they are doing, and they want people to like book through online, because they can then predict how many people will be coming and take necessary actions accordingly, like have more people at security gates and things like that. Next was with respect to Odisha Park. In the first half, it had a footfall of around 0.93 lakhs. So, how much are they expecting for the full year? So, they said around 3 to 4 lakh for the full year. That means around 3 lakh footfall they're expecting for the next half year, which is almost 3 times of what they have achieved in this first half of the year.